Welcome. As I said that I will look at Japanese candlesticks. The candlesticks, we are going to check what candlestick is or what happens in candlestick formation. We call it Japanese candlestick. I don't know whether they originated from Japan or what, but they are called the Japanese candlestick based on the inventors and the first people to describe the formation of candlestick in the forex market. So I'll move very fast. I have very few minutes to explain this, so we go directly to the point. So this is how the candlestick is formed. As you can see, this is how candlestick is formed. This is the upper part in some point is called in this the upper part is shadow, the upper shadow and the lower shadow. This is the highest point that the market reached. This point is the highest. Let me use red. This is the highest point that market reached. This one. This is the lowest point the market reached. This wick is like a part is what we are calling shadow. The lower shadow is also called the tail. Okay. So this one is the body from here up to here. This is what we call the body of candlestick. So this is the body of candlestick. Okay. This, let us say this is as you can see our description. This is the bullish. Okay, this is the bullish candle. This is the bullish candle. So this is the bullish candle that is formed, and this is the bearish candle. This is the bearish going down, the bearish, the downwards. This again is the lowest point that market reached, the highest. So at this point market opened here, okay, went up, then dropped down up to here, and then went back to here. So market closed at this point. This is the close, as you can see. Are you getting? This is the close, opening, close when going down. Up, this is open, opening point. So market opened. First the market went down at this point, then went up to here, then went down up to here. So it closed at this point. So the next candle will be opened at this level and might maybe go up or might go down. Are you getting? Now in the other case on the bearish candle, the bearish mark the bullish candle and bearish candle. Okay. On the other case, this candle is formed like this, and the next candle will start forming from here. This will be the point. The candle might be formed down or up. You can see the closing. The candle started forming here, the body up to here, it closed at this point. The opening is at this point, then went up, then it continued going down. Here it formed the shadow, then closed at this point. These are the real body, the white and black. In some case we set them as green, the lime green, and the red. Okay, are you getting that? So that is how the candle is formed. If we can go to the real market, if at all we can go to the real market, let me use this one. I explain using the real market. Now you see this body as well. On the real market, these are the we go to the real market. Okay, so we go to the next before we move to the real market. I'm not getting the exit button. Okay, okay, we move to the real market. I want to explain this on the real market. This is now the real market. So we have this candle. Let me explain using the candle that is going down here. It's the green one that is going up. This is now the bearish, the bullish, let me add something. I think that one will be okay. Okay, yeah, good. Okay, this one is the bullish. Let me use these candles, this and this. This is the bullish, this is the bearish. So this is the bull, this is the bull, this is the bearish, which is down. Let me indicate it with the D. Okay, so I'm talking about this and this. Okay, let me even delete this. Now this is what there we were calling the shadow or the wick. The shadow, this one is the shadow. This is now the real body from here to here. If you can see the market, this is the opening position. Market opened there, then the candle moved up to this point, went up there, then closed at this point. This candle started forming at this point. There was a gap, so it started forming at that point, came down, went up kiasi up to here, then came down, then it reversed up to this point. Okay, then formed the body of the red. Are you getting? This one started forming here, went up a little bit, came down and closed at this point. So that's why this one, the bullish, started forming at this point, came up, dropped, closed at this point. Now this one now is forming from this point. Okay, sometimes there is a gap, because if you check where this market closed at this point and at this other point, you will find that this one started higher, not like this one, which is contrary to when we reduce this noise by going to a higher time frame. So we can start by analyzing 4 hours. You see, 4 hours is somehow exactly, but here you can see that there is also a gap. This one closed at this point. This could have started at a point like this, at a point like this, like this there. Okay, but this is the shadow body. This is now the opening. You can see closing, opening, closing. So that is how candlesticks behave. So those are the real candlesticks. We are moving, so if we are continuing, watch the next clip to see our continuation of the part 2 of the candlestick. We are moving now. We have looked at the parts of the candlesticks. Now we are going deeper, so check the next video on candlesticks.